So when you think of controlling wealth, you probably want to have some of it first. Otherwise, you don't have anything to control. Every time you swipe the debit card, you buy the food, pay the utility bill, everyone else is getting all your money. The loan is unstructured, meaning there's no repayment schedule, so it doesn't interrupt your ability to access capital from other banks if you need it. In order to accumulate wealth, it has to reside somewhere. And when I talk about it, I mean money. And wealth is not money. So when we talk about taking control of your wealth, we're not only addressing the fact that your money has to reside somewhere and that from that place, you can control how you finance the things that you need throughout your lifetime. You can control and be the banker as it relates to your needs. But we're also talking about how to control what wealth really is. More freedom of time, more freedom of money, more freedom of purpose, more freedom of relationships, more freedom to pursue all of the things that you want to do with your family or with your company. Or if you're like me, if you own several companies. That is when I say, hey, let me tell you a little bit about taking control of your wealth. That's really what we mean. This is so fundamentally important because what we see out there in the marketplace is that most people that we encounter in this space are describing the infinite banking concept by leading with the solution. And this message from Nelson will live on in eternity because this is really the door that opens for you to develop a deep understanding of just how remarkable the solution is, which is the infinite banking concept. But unless you understand the problem, the solution isn't going to matter to you at all. So I want you to think about this. If you've ever been introduced to the concept at some point and your brain immediately went to comparing the infinite banking concept to other financial things that you were already doing, like putting money in the stock market or real estate or mutual funds, etc. So give me a why for yes that you went through that comparison mode after you were initially exposed to the concept and your brain decided that it wanted to compare the concept to all the other things that you were already doing financially.
Yeah, we're getting a lot of whys, Jason. People are comparing for sure.
Okay, there you go. Now, this is incredibly common. And here's what I want to clarify regarding the infinite banking concept is that it's not an either or. So it's not, should I become my own banker or should I put my money in insert financial product here? This is where there's such a gap in teaching the concept. And that's why so many people miss it initially. In infinite banking is a process. It's not a product, and it is never going to be about addressing the yield of an investment. And a fatal error in thinking is that this concept has anything to do with interest rates or life insurance. Nelson would often say, to people's amazement and sort of kind of deer in the headlights look, when he would say, most people simply don't know that the infinite banking concept has absolutely nothing to do with life insurance. The essence of the infinite banking concept is that it's all a matter of controlling how you finance the things that you need throughout your lifetime. Now, what are some of those things? What are some things that you need to finance throughout the course of your lifetime? Let's type them into the chat window. Okay, we've got a car, we've got a house, car, reno, buying a home. So homes are the most common response that we're seeing here this morning. Everything. Christina, very good. So Christina, you're absolutely correct. Every decision that you make regarding money and a transaction involving money is a financing decision. Now, what do I mean by that? Well, even if you pay cash for things, you're making a financing decision because when you pay cash for something, you are not only transferring the money away from you permanently, but you're also giving up all of the future interest that money could have otherwise earned. And you're not just doing that for your generation, You're doing it for every generation that comes after you. Now, that's called lost opportunity cost. Now, people use that lingo, but very few people actually reckon with lost opportunity cost. And there are no exceptions to lost opportunity cost. Nobody is exempt from it. You have to reckon with that. And so what we want to show you through the implementation of the infinite banking concept is not to compel you to change your financial objectives, whatever they may be, but to help you understand that if you change the process of how you go about achieving those financial objectives, which can include investing, then you're going to put yourself in a position of total and absolute control. You're going to create a peaceful, stress-free way of life financially. You're going to control the banking function as it relates to your needs, and someone has to perform that function. There are no exceptions. And you're no longer going to abdicate both the opportunity that becoming your own banker represents in your life and the responsibility of handling and controlling that function as it relates to your needs. People aren't having that conversation. They're leading with the solution. Hey, let's talk about dividend-paying whole life insurance and all the financing characteristics. And do you know that you can take a big, giant dump into one of these policies? How many of you have heard that lingo before? Dump in. We're not going to teach you how to take a crap in anything today. We're going to teach you how to take control of a function that relates to your needs so that you can build prosperity financially for your family, for your company, for your kids, your grandkids, your key employees, your nieces, your nephews, anyone that you have an insurable interest in. Give me a Y in the chat window if you want to see, because I'm planning to show this and I'm curious if there's an appetite for it. Give me a Y in the chat window if you want to see what we do in our family banking system, because we've been doing this 16 years now.
Well, we're getting a lot of whys, Jason.
Oh my God. Okay. This is great. Okay. So this is good. So you got to stick around, right? This is one of those webinar tactics, like make sure you stick around for the big reveal. The one thing that we're definitely going to do is we're going to be asking you to schedule a time to meet with the right person on my team. And again, I cannot emphasize this enough. Every advisor on the Ascendant and LifeEva team are equally capable, competent, and more than happy to serve you. And so we don't have any one superstar or two superstars that rise above the team. We are one team here. And so whomever you get connected with, you're going to be in great hands. I'm just going to step out and say that right now. Okay, here's the deal. As I walk through the pouring the foundation for the problem, okay, we're going to spend a few minutes getting clarity on the problem. Now, you all mentioned earlier that you have read the book once, maybe more than once, some of you not at all. And so you're all going to have a different degree of awareness of this concept. You're all at a different stage in your journey of researching the concept. And so I'm going to pour a smooth foundation to get us all on the same page, to get us all thinking about our thinking. And then when we dive into the solution, shocker, it's actually going to matter to you. All right, let's keep going. Roman, are we having fun?
Oh yeah, Jason, we are.
Okay, excellent. Now, learning how to think long range is a skill. It's not a statement. It's a skill. And I've personally learned from Nelson, again, having been blessed beyond the definition of good fortune to be mentored by him for so many years, that you've got to be thinking at least 70 years down the road. But the truth is, I won't be here and neither will you. And most people in North America can't think past this weekend. And so let's begin by clearly calibrating on the problem. All of your money is flowing through the books of someone else's bank right now as we speak. And you may not be aware of this, but if you take into account all of that money that flows onto the books of someone else's bank, from all of the sources that you see here on the screen, plus many more, the moment that that money lands on the books of someone else's bank, it's not your money anymore. You just become an unsecured creditor of that bank. That money doesn't belong to you anymore. If you want evidence of that, take out a $20 bill, write your name on it with a thick marker, go to your local teller, deposit that 20, go have a lunch, come back later today, and withdraw 20 from the ATM machine. If you got that $20 bill with your name on it, you better rush and go and buy a lottery ticket because you're one lucky human being. The bank's got to keep that money in constant motion. They can't let money sit still because money that isn't moving isn't worth anything. And the bank needs to keep that money flowing in the form of loans, in the form of what? What do banks do? What is the primary function of a bank? Put it in the chat window.
Circulating money.
There you go. They got to keep money in constant motion. Now, we discussed earlier and had you type into the chat window things that you would need to finance throughout your lifetime. Okay, so immediately your brain's thinking about a mortgage or a car loan or recreational vehicles, things that you would finance over the course of your lifetime. If you were to consider all of your major expenses, right? So just think about the month, all the money that you spend and what you spend it on. If you think of that, take a moment and just process that. And you take into account the amount of money that you handle in a year, not the amount of money that you make. I ask people this question all the time. How much money do you make? Oh, I make 100,000 a year. I make 250,000 a year. I make 300,000 a year. No, you don't. You handle 100, 250, 300,000 a year. You don't make that amount of money. You've got money that's flowing through your hands, not into your hands. That's a problem because if you take into account how many more months you're going to go through all of life's major expenses, and then how many more months every future generation after you is going to go through life's major expenses, you can see rather quickly, it becomes very evident and obvious that you are really getting hit with lost opportunity cost. Every dollar that flows through your hands and onto the books of someone else's bank amplifies lost opportunity cost in your life. Every time you swipe the debit card, you buy the food, you pay the utility bill, you pay the mortgage, you pay the car loan, you pay the credit card company. Everyone else is getting all your money. You pay the IRS or you pay the Canada Revenue Agency. What a complete idiotic name for a government agency. The Internal Revenue Service, the Canada Revenue Agency. And yet we just sit there and take it. It's the boiling frog syndrome. There's a way to secede yourself from the banking system as you realize and as you interact with it today so that you can have money flowing into yours, your family, your business's hands, not flowing through. How many of you can agree with me? And I'll need to hear from everyone before I move any further. How many of you agree and have an understanding that that is a problem? Give me a Y in the chat window for yes or an N for no.
Yeah, we're getting all wise, Jason.
Perfect.
Taxation is theft.
Perfect. How are all of these things financed? You're either paying cash, you're leasing, you're borrowing, or you're swiping a credit card. That covers just about 99% of the North American population. That's how you go about your financial affairs throughout the course of your lifetime. And then whatever you've got left over, the banks want to get their hands on it. Mutual fund companies want to get their hands on it. The government wants to get their hands on it. Someone or some other organization thinks that they can do better with it than you can. Now, if you think about financing all of these things through the books of someone else's bank, you're doing all the work, everyone else is getting all the money. You all agree and have clarity that this is a problem. Nelson described in his book, for most of you who have read it, that there are four characters in the financial play: the depositor, the borrower, the banker, and the bank owner. The fact is that the majority of you on this call today are only two of the four characters in the financial play. You're the depositor, because you're depositing money onto the books of someone else's bank with every financial transaction that you encounter in your lifetime. You're a depositor. Every bill that you pay, every loan repayment that you make is someone else's passive income. That's something you should write down. Write it down. My debt servicing payments are someone else's passive income. How soon do you want to change that? Put that into the chat window. Tell me how soon you want to change that. What are you seeing, Roman?
We're getting now, today, as soon as possible, now.
Perfect. So you're two of the four characters because of what I just described. But in order to become the banker and the bank owner, you've got to become your own banker. That's the only way to do it. And when you become all four characters in this financial play throughout your lifetime, then you are not only going to have the money flowing into your hands and remaining within your control inside of an entity that you own, you call the shots, you have the gold, you make all the rules, but you're also going to be able to create that peaceful, stress-free way of life financially so that you're actually controlling your wealth being your relationships, your purpose, your financial objectives, all of those things that are so important to you, all of the people that are so important to you. And we're going to go through a pretty amazing questionnaire that I'm going to have you think about, and we're going to have some good chat and bring people on who might want to share in just a short while, because I want you to really process what the advantages of this concept can be for your life. This is an interesting question. Let me know in the chat window if you feel like you're not taxed enough.
People say, please stop that sarcasm. LOL, LOL, way too much taxed.
Okay, good. Well, here's the truth. And thank you, Roman. And thank you all again for being a good sport. This is, nobody's ever been injured participating in our virtual events. And so really appreciate you being a good sport. But the truth is that in North America, the average family is paying that percentage of their gross household income in taxes. That's the truth. The more you make, the more they take. Now, this guy just filed his tax return and he got his notice of assessment back from the government. So he's not a real happy camper. He doesn't work in our office though, but he's not a happy guy. This is today's public service announcement. What you want to do when you're accumulating capital and you're multiplying capital is you want to shield that capital from onerous taxation. And if you think about this carefully, if the government creates a problem, too much tax, and then turns around and grants you an exception to the problem that they created by giving you the opportunity to participate in a tax qualified plan, like a 401k or an RSP or a tax-free savings account, aren't you just a little bit suspicious that you're being manipulated? All of these products are created under the guise of giving you a tax break. If the government really wanted to give you a tax break, they would simply cut the taxes. Now, it should be obvious to all of you that they have no interest in doing that. And if you were to look ahead into the future, it should also be obvious to you that the government's going to need more money, not less. Now, the reason I share all of this is that it would be important to recognize not only that there are exemptions that exist in the tax code today, and that dividend-paying whole life insurance contracts are the greatest exemption that exists in both the Canadian and American tax codes, but the government's going to go looking for that more money in areas where you're already on their radar. You file a tax return every year. You're on the government's radar. Contribute to a 401k or an RSP. You're on the government's radar. You contribute to a tax-free savings account. You're on the government's radar. Am I even remotely suggesting that you shouldn't do any of those things? Of course not. But all that I'm doing is bringing awareness to the fact that you're on their radar. And the fact is that wherever wealth resides, someone's going to try and steal it. It's not a matter of if, it's when. And so you can shield yourself from that. You're most at risk, especially if you're even the least bit effective at accumulating wealth. Now, if you were to examine all of your existing assets and you just asked yourself, which of those assets are a sitting duck for future tax hikes, you've got to address that. You've got to get together with the right person on my team, schedule a time, have a look at it together, and make sure that you're addressing it. You're taking proactive measures so that you can gradually and incrementally shield all of it from onerous taxation. And if you're in a position where you've created a legacy, you've created an estate plan, the worst thing for a beneficiary to inherit is a taxable one. A taxable inheritance is the worst thing to inherit. And if you've got taxable savings or assets, you've got a big problem. So do your beneficiaries. This one really stings. And I'm not talking about interest rates, everybody. I'm talking about volume. the volume of interest. As I mentioned earlier, a fatal error in thinking is that the infinite banking concept has anything to do with interest rates. It's all a matter of where your money is flowing to, who your money is being put to work for, and for how long. Now, what are some examples? If you just entertain me in the chat window, what are some examples of interest payments? Type them into the chat window.
People say mortgage so far.
Okay, mortgage.
Credit cards, car
Okay.
loan,
Okay.
line of credit, loans.
Okay, perfect. Yeah, those are all great examples. Thank you, everybody. And if you think of all the money up to this point in your lifetime that has flowed through not only your hands, but your family. Now, I want you to think about not just your immediate family under your roof. I want you to think of your entire family, your entire lineage. Think of all the money that's flowed through your family's hands up to this point. You may have guessed it right. It all ended up right back in someone else's bank. And if you're a business owner or an investor, the problem is amplified even further. Neither you, your family, your company will ever see that money again. So let's recap. You earn income from a variety of sources. You're taxed. All the money flows to someone else's bank. And yet you repeat that cycle over and over and over again. How does that make you feel? Tell me in the chat window in your own words. How does that make you feel? Roman, what are we getting?
For some reason, my chat isn't working, Jason. If someone from our team can hop on and see what we're getting, be awesome.
You seem frustrated, Jason. Powerless, outraged.
Okay, okay. There we go. Thank you, Sarblo, and thank you everyone again. Now, here's why you should stop this cycle. You should stop it because this means more money for your dreams. It means more security for your family and the control to truly enrich your life and the lives of others. This is a screenshot that you're going to want to capture because at some point you're going to be compelled to create a time and schedule a meeting with the right advisor on my team. And don't bring any money to that meeting because they're not going to ask you for any. The process of having that discovery session is valuable because you get to explore those clarifying questions and the insights that come up for you on the implementation of this process. You get to look at real world examples. You get to watch how your own plan is engineered and put together to achieve a defined set of objectives. That's what you want to do, is meet with the right person on our team. So don't procrastinate. Take action while the knowledge is fresh. All right. Now, this is something that's an obvious yes. We've never had anybody say, no, actually, I've quite enjoyed every experience that I've had dealing with someone else's bank when I needed ready access to money throughout the course of my lifetime. Well, we experienced that frustration as well. And for me personally, I was just tired of feeling like just being another account number, just being lost in a sea of transactions and red tape. Pick up the phone and call your bank today. And what you're going to feel like is a pinball. You're going to be bounced around all over their call center queue. And when you end up talking to somebody, it's not the person you should have been speaking to anyway. So you're going to get transferred another 48 times before you even get your simple question answered. You've got nosy and lengthy credit applications to borrow money on someone else's terms. So you're not in a position of control. I felt the very same way prior to July of 2008 when I was first introduced to this concept. July of 2008. And I want to share just a quick story about our journey and how that went for us. So in April of 08, this was a few months before we were introduced to the concept, my wife, Rebecca, and I, we had purchased our first home, and you could get 40-year amortization schedules on your mortgages back then, 40 years. So we thought, wow, this is incredible. We've got a mortgage for $426,000+. We've got a really low interest rate, right? Because that's what the bank wants you focused on. And isn't it interesting that the conventional banks make record profits in the lowest interest rate environments, but yet the common consumer thinks that, hey, this is a great lot in life if I get a low interest rate on a loan. The banks are raking in the profit because it's not about the rate, it's about the volume. Because the volume of borrowing goes up, which means the volume of interest in dollars goes up. So for my wife, Rebecca, and I, we didn't know what we didn't know at the time. Active real estate investors, had 13 properties, bought this principal residence, systematically transferring all that money away from us. And then when I was introduced to this concept, we began to implement it quite aggressively in our lives. And we got rid of the conventional bank 33 years ahead of schedule. Now, if you envision this, picture this in your mind, we began to purchase dividend-paying whole life insurance contracts. Now, these contracts are the tool to implement a process. And these contracts began accumulating cash value immediately. Now, cash value, most people don't know that cash value is not money. It is the present value of the future payment of a death benefit. That's what cash value is. But here are the advantages. That cash value is contractually guaranteed to grow daily. It cannot go backward. It cannot be repossessed. You pay no tax on that buildup. You've got a ever-increasing death benefit thrown in for good measure. You pay no tax on that either. And would you believe it? There's not a single person in attendance today that isn't going to die someday. And you can borrow against that ever-increasing cash value, which is guaranteed to match the total death benefit by age 100 of the life insured in Canada and age 121 of the life insured in America. And so every day that you're aging, your cash value is rising. And every premium payment that you make, every dividend that you chunk back into the policy increases the death benefit. You can contribute almost unlimited sums of money, and it's a private contract, and it's unilaterally binding, meaning the life insurance company itself is the only party to the contract that's required to make and fulfill legally binding promises, like a guarantee to increase your cash value daily, like a promise to pay a windfall, a death benefit when you die, and another really important promise, a guaranteed loan provision, where you can request a policy loan at any time for any purpose. The loan is unstructured, meaning there's no repayment schedule, and it's not reported to TransUnion or to Equifax. So it doesn't interrupt your ability to access capital from other banks if you need it. It doesn't affect your debt servicing ratios and the formulas that the conventional banks use to determine whether or not you're a good credit risk and whether or not you can access someone else's pile of money. So I want you to picture this. You can contribute unlimited sums of money, just about. You're growing cash value on a daily basis. You've got ready access to real money, not cash value, by borrowing against the cash value without interrupting any of its daily growth. You pay no tax. You repay a policy loan on your terms. You co-own the life insurance company. How many of you would like to co-own an institution that lends money? If you realize how significant the function of banking is in your life. When you purchase one of these contracts, you become a co-owner of that life insurance company. Now, I'll bet you $1 to a Krispy Kreme donut that nobody from your bank is calling you and saying, excuse me, Mr. Smith, we just wanted to let you know that we've generated record profits this year. And we really appreciate the fact that all of your money is flowed onto the books of our bank. And we want to send you a dividend. Unless you are a stockholder of that bank, that phone call never happening. With the life insurance company, different story. They must, when they have a divisible surplus called positive net income, they must distribute a portion of that net income to all of the participating policyholders in the form of a dividend and take the remainder and leave it on the books of the insurance company as policyholders' equity. So who are the sole beneficiaries of 100% of that net income? If you type into the chat window, the policy owner, then you win the grand prize today. And Roman, the grand prize, I believe, is a set of steak knives.
Yeah.
Okay.
So we have people saying that it goes to the policy owner, Jayson, yes.
Okay, perfect. Now, knowing that all of this is true, which it is, I want you to ask yourself the same question that I asked myself in 2008. How much of my money do I not want residing there? Because from that place, I can control how I finance all the things I need. I can invest, if I choose to, in anything I choose to invest in. So all of my financial objectives go on uninterrupted. But the process of how I make those objectives achievable realities changes entirely. And so do the odds. So my wife, Rebecca, and I, after purchasing these dividend-paying whole life insurance contracts, we began to access policy loans. We took the life insurance company's money because you're not borrowing from yourself, banking on yourself, transacting on yourself, cash registering yourself, whatever all those other creative names are out there that all took what they learned from Nelson and spun it into something they called their own. What you're doing is you're borrowing against your cash value, which is not money. The only money of yours that's going back into the insurance company that you co-own is your premium payments and your loan repayments. And the more capital that the insurance company receives, the more capital they have to multiply. Kind of sounds a little bit like a bank, doesn't it? Except the difference is now you're all four characters in the financial play. Am I depositing money? Sure am. I'm making premium payments. And anybody who tells you that a premium payment is a deposit shouldn't be saying that to you. They're going to get themselves in a lot of hot water with the SEC or other government regulatory agencies. A premium is a payment, period. That's what it is. And you're the depositor, the borrower. You get to request policy loans. You're the banker. You dictate the repayment schedule of your policy loans. You're the bank owner. You participate in divisible surplus generated by the lender that you co-own. And when dividends are declared, which happens once a year, the dividend is contractually guaranteed to be paid. I say that again, contractually guaranteed to be paid, and it cannot be repossessed or lose value ever. And you're not on the government's radar because it's a private unilateral binding contract. It's not an investment. Tell me in the chat window how that makes you feel.
We're getting optimistic, great, in control, warm and fuzzy, free, and we're getting big smiles. Great, excited.
Now, when I shared with you that my wife Rebecca and I got rid of the bank 33 years ahead of schedule, I got to ask you one question. Give me a Y for yes or an N for no in the chat window.
A lot of smart people today, Jason.
All right. Now, the first person I called was Nelson. And I said, Nelson, and here he is. He's right next to me each and every day, every meeting I do, every event I do. I miss him. I think about him every single day. And I called and I said, Nelson, I said, I think we solved the problem. We just got rid of the conventional bank today. And he said, in his, Southern drawl, being that he lived and worked in Birmingham, he said, well, hang on there, boy. He said, remind me again, how long was the original loan schedule? And I said, well, it was 40 years. He said, do you want to be an honest banker, son? I said, absolutely. Yes, sir. He said, well, you've got to finish the original loan schedule. You're just going to change the process of who's getting the money. So he coached me in that moment. He said, you've got to continue making the payment. You're just changing the process of where the money's flowing to. Because remember, by getting rid of the bank 33 years ahead of schedule, we had a pretty sizable policy loan balance that we had to repay. But who's in a position of controlling that financing function now? If I went 3, 4, 5, 6 months without making a payment, nobody from the life insurance company is calling me. There's no lien on my home. The lien is on the death benefit of the insurance policies, not the property that we live in. That puts us in a position of total and absolute control. And if there's any volatility in cash flow, we still have a peaceful, stress-free way of life financially because we're not losing a wink of sleep over it. And our total cash value is rising every single day that we are. And God forbid, if the unthinkable had happened to Rebecca or I, there would be no indebtedness left behind to the family. And the surviving family would never have a bad financial day for the rest of their lifetime. So I ask you the same question. Isn't that good? Give me a heck yeah in the chat window if you're with me.
Absolutely, heck yeah. We have a lot of heck yeah.
Okay, excellent. That's good. Like if your blood pressure isn't stabilizing by this point because you see this as a solution to your problem, then hop off the webinar. Go do something else with your weekend. Every interaction that we have with people matters because we're changing people's trajectory. We're changing families' legacies. We have to fulfill that duty of delivering death benefit to grieving families. And would you believe that not one family has ever said, I wish the check would have been taxed and I wish that the amount received would have been less. Not one person. And so you are in a very blessed position by being here today. Very blessed. And we know the entire team knows firsthand how this can perpetuate everything that you're doing. But in order to do that, you got to get into the banking business, the family banking business. Now, here are 3 basic facts. Your money must reside somewhere. This is an irrefutable fact. 2, you finance everything that you buy. Even when you pay cash for things, you're making a financing decision. 3, someone has to perform the function of banking as it relates to your needs. There are no exceptions. Here are the steps that you should take, because by doing that, you're going to empower yourself with financial independence. You're going to gain control over your economic future. You're going to unlock wealth creation that aligns with your personal values and goals. Here's what you need to do. You've got to be intentional about building a pool of capital inside of an entity that guarantees daily growth of cash value, ready access to money on demand on your terms. You're going to recapture the interest, the money that you're presently paying to banks, credit card companies, finance companies, for all those things that you need throughout your lifetime. 3, you're going to protect your livelihood, your real estate portfolios, your investment accounts, your retirement account balances, everything that you've worked so hard for from being decimated at the highest levels of taxation. Build a pool of capital where? Dividend-paying life insurance. Dividend-paying life insurance. Now, most people simply don't understand how the tool works. I just explained it to you through Rebecca and my example, one of many. And why don't people understand how it works? You'll never guess who's buying the most dividend-paying whole life insurance contracts on earth. Take a wild guess. Put it in the chat window.
Getting banks, bankers,
Banks.
the wealthy.
And so if banks are the largest purchasers of these contracts and they regard dividend-paying whole life insurance contracts as a tier 1 asset on their balance sheet, they're either really stupid and enriching their stockholders, or they know something that you and I don't. Which one do you think it is? If you guessed they know something that you and I don't, that's the right answer. So let's mimic what the banks do and we'll do okay. Now look, here's the deal. If you want to build wealth, then you have got to reckon with a few things: tax risk, market risk, liquidity risk. There are no exceptions. And dividend-paying life insurance addresses all 3 of those risks, because you've got ready access capital on demand on your terms without triggering tax, without reducing the asset's value. You eliminate your market risk and you receive contractually guaranteed daily growth that I mentioned earlier, lifetime access to money. You crank up a new business where no business existed before. Dividends cannot be repossessed. They cannot lose value. Your cash value grows every day, can't go backward. You pay 0 tax on the buildup, 0 tax on the death benefit, 0 tax on the dividends. When you chunk them back in to buy more paid up additions, in Canada, it's exempt from the passive investment income tax rules, and you can be positioned to never pay tax on the ever increasing, basically cash, actual cash that you can access throughout the course of your lifetime. Now, would you sleep easier at night if you knew that your money was no longer subjected to these risks? Would you sleep easier? Yes or no? And Roman, I want to hear from everybody.
Yes, please participate, everybody. We encourage everyone to say yes or no. People say yes, darn right.
Okay,
yes,
good.
A lot of yeses, Jayson.
Now, here's what you need to do. And the reason you need to do it is because it's going to be a financial advantage for you, your family, your key employees, everyone that you have an insurable interest in. Grab your smartphone and do something smart with it. Text the word schedule. If you're in America, text it to the number you see on the screen. If you're in Canada, text it to the number you see on the screen. Do something smart with your smartphone and schedule a time to meet with the right person on my team. I promise you that it will be a valuable, very valuable use of your time. That I can assure you. Okay. Now I promised you I'm going to show you what we're doing in our family banking system. Does everybody still want to see that?
Yes, people still remember, Jayson. People still want to see it.
Okay, awesome. So what we do, because most people, when they get exposed to this concept, they're thinking, how can this work for me? That's where your brain is, right? Your brain is very focused on how can this process work for me, the individual? But very few are having the discussion around building the family banking system, which is what we've done and what we're now teaching all across North America. And it is taking off like wildfire. And when I say wildfire, I really mean that. Like, it is taking off like wildfire, because people, even if you already have a policy, maybe you've already taken a progressive step forward in this journey of infinite banking in your life. When you're thinking about growing your program, and you're thinking about putting together your own family banking system, we want you to think about LifeEva and Ascendant, because this is what we're teaching. All right, let's dive deeper. So what we do is once a year, we get together as a family and we host our annual family banking meeting. Now, what do we talk about at these meetings? Well, we spend some time in Nelson's book and we'll address a very particular topic that's meaningful to the family at that time. We involve all of the kids. So our kids, including my nieces, nephews, etc., they all actively participate in the family banking system. And if I could have one of my teammates go to the Bankers Vault YouTube channel, so Bankers Vault YouTube channel, and pull up the link to the video of my son and my nephew doing a talk in front of 300 people at a live event in Henderson, Nevada, where they explained a teen's perspective. They're 15 years young, and they explained a teen's perspective on the infinite banking concept. It's a short talk. It was just under 20 minutes, but wow, was it ever impactful. They got a standing ovation. The crowd loved it. And so if teenagers can grasp this quickly, I can absolutely assure you that you can. And in this family banking meeting, we recognize the kids. We recognize the kids for their active participation, accessing policy loans, repaying policy loans. We're launching Next Gen IBC, And my daughter, Charlotte, who you see standing right next to me here, smiling ear to ear, one of my twin daughters, my other daughter, Caitlin, is right next to her. But Charlotte is launching her own podcast named Carly's Coins. And we just finished all of the planning for the podcast yesterday evening. She has her first guests coming on next Friday. And so she is actively going to be coaching and teaching kids about the advantages of the infinite banking concept. These are all the spin-offs, the advantages of family banking. But what are we doing specifically with the family banking system? We're helping develop the skill set of not losing the money. And Joe Polish of Genius Network, if you don't know who Joe Polish is, he's a wonderful guy. You should know and follow him. He founded the Genius Network. An amazing guy, one of the best human beings I know. And he said something at our last session, and he said, you know, wealth is not just about making money, it's about not losing it. And that's an entirely different skill set altogether. Well, this speaks perfectly to the process of becoming your own banker, the infinite banking concept, because everyone in the family was really good at losing money because they were making all the car payments, buying all the food, paying the utilities, paying all the loans, paying all the credit cards. They were systematically losing all of the family's money. But now the money's flowing into our hands, not through our hands. And I'll show you exactly what our family banking system is. And you'll see the evidence of that. Nelson said, this is meant to be a system of policies. This is not meant to be achieved through the device of a single policy. Nelson wanted people to know that this was meant to be achieved through the devices of a system. And if you want to know what our system is, let me show you. So when we began in July of 2008, our first policy anniversary was in July of 2009. So in 2009, at our first policy anniversary, we had 2 policies in force. We now have 77. And there are 27 lives insured in our family banking system, including all the key people in all my companies, all of our kids, my nieces, my nephews, my sister, my assistant, and so on. Our annual premium in the first year was $16,800. This year, it's $1,050,000. Total death benefit in 2009 was $500,000. As of the end of Q1 of this year, so this number is much higher now, the total death benefit was $40,801,000 and rising continually. Total cash value, which is not money, was $4,250 at the end of 2009 and $3,799,000 at the end of Q1 of this year. And it's going up every day. Every single life insured wakes up tomorrow and the total cash value in those policies is larger than it was the day prior. Loans. First policy loan was for a car seat for my firstborn son, Jackson. You can't get a policy loan for less than $500 today, but back then you could. Today we have $1.6 million in policy loan balances We lend capital not only within the family, but we do private lending. So we keep money in motion. We keep it circulating. We have 1.7 million, lot higher today. This was the figure at the end of Q1, 1.7 million in loan amount available. So if a high caliber opportunity tracks me down, can I take advantage of it immediately? The answer is yes, because to request a policy loan, all I have to do is log into my client access account and push request a loan. That's it. There's no lengthy, nosy credit applications. There's no income verification. There's no fat cat banker asking me a bunch of questions about why I need the money. The insurance company is the administrator of our 77 policies, not the owner. The owner calls the shots, not the administrator. That's a peaceful, stress-free way of life financially. Loan repayments. Here's the kicker. This is and should be the big moment for you. We've got 80,000 a month, every month, flowing into the family's money pool, not through our hands. How are we doing in terms of kicking the crap out of lost opportunity costs now? Let me know in the chat window if you just had a big aha moment. Give me a Y for yes or an N for absolutely not.
So far we have all yeses and wow, amazing.
So thank you, Roman, and thank you again to everybody who's participating. You really appreciate the engagement. The fact is that our family, our key people in our companies, our businesses themselves, they all need the use of money to finance things, to transact. We haven't recaptured 100% of it in the entire family. We still have a distance to go. But just take a second to think about all the money that's flowing through your family's hands and your business's hands, not into, but through. You've got to change that because you're developing awareness of a process that puts you in a position of controlling that and changing the trajectory of your family permanently. And then God forbid, when the unthinkable happens and people die, which in our family, that's happened. My father-in-law spent his career working as a police officer. 35 plus year career as a police officer. This gentleman that you see right here, he retired, and I said, "Hey, Papa, I want to get you insured. I want to pay for it. So here's something to pay very close attention to. You don't have to be the life that is insured. Every person that you see in this picture, I own policies on." And so I sat down with Papa and I said, "Hey, Papa, I want to get a policy on you." And he said, "Well, I don't think I'm insurable. I'm a type 2 diabetic." And I said, "Well, there's only one way to find out. Let's apply for it. I'll pay the premium. I'll control access to the cash value in the family banking system. And when that day comes, when you pass away, Nona will not have a bad financial day for the rest of her lifetime." And Nona's standing right next to Papa. "She won't have a bad financial day for the rest of her lifetime. And you get to put a policy in place for all of your grandkids, paid up." And he said, "Wow, that sounds great to me. Like, I don't have to come out of pocket a single penny." I said, "No, all you have to do is shop at home for the things that you need financially. So don't go to someone else's bank when you need a new vehicle, new set of golf clubs. You need to plan travel with Nona. The list goes on and on. Come to the family's money pool and we will finance it." So we applied, got him approved. I purchased 2 policies immediately on his life. We anticipated, and so did the actuary at the life insurance company, that he was going to live a long time. Otherwise, they wouldn't have approved him. September of 2020, 5 weeks earlier than September of 2020, Papa was diagnosed with cancer. And in September of 2020, he passed away. I met with him in hospice 3 days before his passing and reiterated, because he was worried sick about Nona. He was worried, right? He was just thinking about everyone but himself. And I said, "Papa, everything's going to be fine. We're going to honor your legacy. Nona's going to be taken care of. We'll take care of her tomatoes. We'll shovel her driveway. We'll cut her grass. Like, she's going to be, don't worry, your tomato garden's going to be fine. Everything's going to be fine." And 3 days later, he passed, and we honored that legacy. And so what I want to share with all of you is that you can do this too. You've got to schedule a time. Get connected with the right person on my team. I'm entering my 16th year in this journey. And Nelson reminded me, and so many others, that this is not going to be achieved overnight. But you know what? The rest of your life is going to go by anyway. And so why not gradually and incrementally create a peaceful, stress-free way of life? Because do you believe that less stress adds longevity to human life? It absolutely does.
Compounding dividends is like a runaway train, and once it gets going, it's the key to building wealth. And that's one of the reasons why I have so many policies as well. I don't invest capital in anything that I don't know. I don't care how appealing the investment opportunity is. If I'm unfamiliar with it, I don't invest in it. Keep reinvesting those dividends into more stock.